Hi, it's Adam Hewson. I'm coming to you from the digital studios of Market Club, and we've had quite a few requests to look at crude oil. So the contract that we're looking at right now is the electronic version of the November contract. And as you can see, we sort of made our lows here in the February-March period, and we've had a nice kind of run up, and then we've gone into this kind of like movement back and forth, really, except for this last move, which took us to our best level since August 24th. Now the question becomes, is this going to become like an energy field where we're going to basically store up energy, excuse me, just reread that, and we're going to push this market higher? It has all the indications of that's what it's going to do. However, there's a big seasonality in crude oil, which is it should be going down at this time of year. Now, what strikes me as very strange is when you have a seasonality and the market's doing the opposite to that, that's something to pay attention to. So let's just take this off the screen. As I said, we're looking for this to be an energy field similar to what's happened to gold. You remember our energy fields, which is going to be capable of pushing this market higher. I'm going to give you a specific area that I'm looking for. One of the key areas to look at in terms of trading is going to be this level here, 75. If we see a close over 75 in the next few days, then I'm confident saying we're going to see this market go significantly higher. And remember, this is a market that nobody has any control of. It's a world market. That's what makes it so exciting. And let's take this off the screen, and I'll scope this out a little further. And what I'm going to do is to put our Fibonacci indicator in here. Now we talked about Fibonacci before, so we're going to go from the very high and drag this down to the low right there. And as you can see, we have potential targets to the 83.97 level, which is a 38.2% retracement. And if we go to the 50% level, it's going to be $95.82. Now again, this is something to look at because this could be potentially crippling for the U.S. economy and the world economy if it takes place. We are potentially in an inflationary environment somewhere along the line here. So if we could see the market move back up here potentially to the end of the year to these levels, that would not be a particularly good thing for the economy, but it shows you the potential on the upside for crude oil. Now we trade crude oil based on our trade triangles. And trade triangles are very simple to put on. You just click here, and you can see how the trade triangles come in. As you can see, it's been a little choppy here, but this last trade triangle, in fact, let me do this. Let me just pull this down, and we're taking the Fibonacci numbers off. But I want to show you a couple of things here. You can see from our monthly trade triangles, which are right here, we're along from 61.22. Now I can put that on our screen very simply by just clicking here, and I'll take the weeklies off so you'll see where that came in. So here you are. You've got a couple of movements right here and right here. Now obviously when you get into a choppy zone, the longer time frame you look at, the more opportunity there is to go with that longer term trend, if that makes sense. So if we put in our weeklies, which only occurred at 72.65 on the 12th, which was yesterday, you can see where the markets is moving higher. But again, it looks to me like the potential is for this market to move up. And again, over 75, this market's going to be heading to those zones, the 90, 93, 94 areas, and certainly to the 83 level. Hey, this is Adam Hewson looking at crude oil. Pay close attention to these markets. There's lots of opportunities. And all of our triangles right here are all green. Every success trading the triangle.